Hello friends, on this episode of the Adams Chetwood video newsletter, I'm going to tell you why we describe ourselves as investors as rational optimists. And I'm taking that term from a book by a gentleman named Matt Ridley, which I highly recommend. But I think this is timely because in coming off of a year which has been so depressing in many ways, when it feels like life is getting worse, when our country seems to be unraveling, the fabric of our nation seems to be unraveling, and people are assuming the worst about each other, and we've had a global pandemic that has ravaged lives and personal finances, I wanted to encourage you a little bit. And so I want to put up two charts in front of you. One is going to show you that as investors, the market rewards being optimistic over a longer period of time. This first chart is from our research partners at JP Morgan, and it's going to show you the returns of the American stock market over the last 100 years. And as an overlay of this chart, I'm going to show you all of the national crises that we've experienced, from world wars to stagflation to the Great Recession. And you're going to see that over the long term, the market keeps marching on, and it rewards those who are optimistic. I'm also going to show you a chart that looks at life expectancies over the last 200 years or so, and you're going to see that even though we may seem like every time we turn on the news that life is getting worse, it's actually getting better. When we look at life expectancies across all of the continents, that over the last 150 years, life expectancies have actually doubled. And I want to read an excerpt from this book because I believe it will be an encouragement to you and give you some insight into how we manage your portfolios. And I want to start with this quote from Thomas Babington Macaulay, which says, "On what principle is it that when we see nothing but improvement behind us, we are to expect nothing but deterioration before us?" So when we look at life expectancy, when we look at GDP per capita, when we look at quality of life metrics, we're seeing that those are going up, and not going up slowly. They're going up exponentially over the last 150 years. So consider this, consider these statistics. Since 1800, the population of the world has multiplied 6 times, and you would think we don't have enough resources, we're going to run out of food, we're going to run out of water, people are going to die of starvation. But even though the population of the world has multiplied 6 times, average life expectancy has more than doubled, and real income has risen by more than 9 times. And it's not just the affluent. You'll see that the United Nations estimates that poverty was reduced more in the last 50 years than in the previous 500. And so is this just the rich getting richer and the poor getting poorer? No, it's not. I want to share this anecdote that I think is really interesting. Today, Americans that live below the poverty line, Americans who would be designated as poor, 99% have electricity, running water, flushing toilets, and a refrigerator. 95% have a television, 88% a telephone, 71% a car, and 70% air conditioning. Consider that Cornelius Vanderbilt, in all of his splendor, enjoyed none of these. And y'all, I say that not to minimize or to trivialize the plights of folks in our nation, our friends and neighbors who are living below the poverty line. I know that that's very difficult, but I am saying that in a time, especially coming off of a year, as investors where it seems like things are getting worse, I think it's encouraging to zoom out every now and then and recognize that things are actually getting better when we look at quality of healthcare, quality of life, as we said before, GDP per capita and life expectancy, that those things are getting better. And that is why the market rewards long-term optimists and really does not reward long-term pessimists. I hope that's encouraging to you and it helps guide you to financial peace of mind.